What's up, investors? Another suggestion from the comments of the video to take a look at Zynga Corporation. Okay, here we go. Now today I'm going to do something a little bit different. I'm going to walk you through my entire process of analyzing a company from kind of the beginning. So what I'm going to do is say this is a company that I got a hot tip on, or it was just a company that just released earnings, and I kind of want to see, run it through the paces of the due diligence process. So I'm going to run you step by step of what I typically do. First thing I like to do, come to this site, seekingalpha.com. I am an author here. I'll post a link to my articles below. If you're a member of this site, you can go ahead and give me a follow. You can message me on the site as well. I like this site because it kind of aggregates some news, it aggregates information, it keeps you up to date on earnings. For me, I'm not getting paid to promote this site. It's just a site that I do like to use. So here we go. We got the stock chart here. Notice that Zynga came public right around 2011. This is what I like to do. Just kind of take a look at, this is not a company I'm following on a regular basis. Come here, just see, look at this chart. Okay, so we came public here, huge spike and run up, and then huge crash, and the stock has really kind of been trading in this like $2 to $3 range for a very, very long period of time. But what we have noticed here is kind of like a steady uptrend. It looked like the stock kind of created a base here, and now it's kind of ticking up. And that's something to keep in mind as we start to walk through the earnings reports and some of the financials, which we'll do in a minute here. The next thing I want to do is this company just reported earnings yesterday. So what I like to do is come here and listen to these conference calls. Now you can listen to them here in the audio version. So if you got a walk to do or a run, come in here and listen. I think this is just really important to come in here and listen to these. And if you want to reduce your time, these tend to be about an hour long. This one's 56 minutes long. Well, this first bit is all prepared remarks. So it's all stuff that the company typically wants you to hear, although they tend to go into a little bit detail. But as you move through these, what is a must read and a must listen to if you're really doing some due diligence on a company to see if you want to invest is read or listen to this question and answer section, because this is not scripted. So you have questions from analysts and sometimes just regular investors, and they'll come here and answer these types of questions. And you find a lot of great detail, maybe about what happened in the last quarter, but typically also what's coming for this company. And so I really like coming here and reading these questions and answers. It's actually, a form of entertainment for you. So really embrace this. And again, this is earnings call transcript. You can find these on a number of sites. I just find on Seeking Alpha, they're pretty easy to find because you can come here on a particular stock and then just come here down to the transcripts, and you can go through if you want to go through the last quarter and things like that. They're all here for you. I really like that. Next thing you want to do is search for the company's investor relations page. So typically I just do the company and then the letters IR for investor relations, and you can come here and find the company. It's going to take you to a page where you're going to see usually latest earnings, or you can come here at financials and then go to SEC filings and find the 10Q or the 10K and things like that. Now, what's interesting is they just reported Q1 earnings. So that means they likely have just reported this 10K. So I went to SEC filings on the site and then found this 10K, and I brought it up here for you guys. Now I scrolled down. The reason why I'm bringing up the annual report is because annual reports usually give you a broad year over year view. So this goes back to 2015. when this company was trading at like $3 a share. So we can see this, now I'm seeing this uptrend in the stock price. Well, what's going on here? So we can come back here and see, well, look, from 2015 to 2017, earnings were actually almost flat. They actually went down this year and they ticked back up a little bit. Even in 2018, they kind of ticked up just a little bit, but look at this. 2019 really broke through, almost like a 50%, actually a bigger than a 50% rise here. It's almost a double. So again, this course from 28 to 2019, look at what happened to the stock from 2018 to 2019. You're almost seeing almost a double in the stock. So So what's going on with the stock price, I can match it up to what's going on with the earnings. So we're seeing year over year over year over year over year, and we really see a nice acceleration here. And this is kind of this is like online game, and then they have advertisings that play over the top of those games. And we're seeing that is, been fairly steady, but really this online game really accelerated here. And so that's pretty interesting. We're seeing our cost of revenues here tick up again. We had a nice rise in earnings here. Sales and marketing, they also ticked up. Basically, your total cost and expense line here stayed relatively the same, ticked up here, and we've got income from operations turned negative. So that's not necessarily a great thing, but obviously the stock has reacted to this tick up in earnings. And so maybe, people on the street or in Wall Street thinking this kind of growth from year to year is going to continue into 2020. And so that takes me into the 10Q, which is just released. So the latest earnings here. Now, I don't think they had released the 10Q, so I came down here and just kind of clicked on financial results, and that took me to this. Actually, this is an 8K. I had to go to an 8K, and it tends to mirror a little bit like a 10K, where it has some information about the company, talks about some stuff, but it does have the latest balance sheet and some of the other financials that we'll walk through here. So this is a end of year to current quarter view here. So basically like a 3-month view. And these numbers are in thousands. We reviewed a few companies recently where it's in millions. These are in thousands. So we're going to add 3 zeros here. So cash and cash equivalents ticking up nicely. Okay, that's good. We've got short-term investments. This is almost like cash as well. This is ticked up. Well, it looks like maybe some of this might have moved to cash, but it's ticked up. This is ticked down. This is ticked up. All things being equal, about the same. So that's fairly good. Let's come down here to total assets, about the same quarter, essentially quarter over quarter, actually year end to quarter here. And let's see what else they've got going on here. We've got some long-term investments, got some other stuff in here, about the standard stuff. Everything for the first 3 months is about standard, about even for this company is what I would say. Let's take a look at the liability side. I don't see any debt here. This convertible note is kind of like that. Almost acts like debt, I guess. Not really, but it is a form of fundraising here. And we're seeing that is about the same as well. So a very steady quarter, at least from kind of a balance sheet perspective for the company. Moving on, let's go to the statement of operations. This is something even more exciting. Now, take a look. We've got 3-month ended. So we've got 3-month ended here, 3-month ended here. This is kind of different. Don't always see it. You're really comparing this quarter to the year prior here, okay? They threw in this, which gives you, this is kind of like a 3-month view here. This is a year over year view here. So that's really what I will focus on, because these numbers more than likely are fairly fairly close to each other because it's only 3 months apart. But notice that we have online game revenue really ticked up nicely year over year. So that's nice. We've got advertising revenue actually ticked down a little bit, possibly due to COVID. Has hurt all advertisers almost kind of the last 2 or 3 weeks of March, and likely for the rest of the year. I don't know how much, that's why I like reading these earnings recalls, because they'll talk a little bit about that in those. So it's definitely worth reading those. So total revenue, look at this. This is really nice. So this ticked up really to here we were a year ago, and here we are today. That's nice. And again, that kind of corresponds to this move we're seeing in the stock here. They're really moving earnings on a year over year basis. So that's nice. So let's see how they're keeping these total costs and expenses here. So we're at $495 for the quarter. We were at $407 last year. That's not bad, considering you had about $140 million move to the upside there. You've only increased costs by about 95, call it $100 million here. That's not bad. Obviously you'd probably like to see better efficiencies there. Maybe they drive down these costs a little bit, would actually help drive profitability, which when you see these parentheses here, this means a loss. And so they lost $140 million in the prior quarter. a year ago, and this quarter, they shaved that off by about 50 million. They lost 91 million, which, okay, so now you want to say, now the next question, okay, they lost 91 million in a quarter. So again, but we saw that they have 500 million in cash and another 708 in kind of this almost cash. So this is not super alarming. Obviously, you'd want these numbers to be positive. If they were positive, this stock would be even higher. So you want to, if you're an investor, you want to investigate how Zynga is going to increase this profitability. Are they going to grow this top line even more? Are they going to keep these expenses in check? These are all questions you want to ask as you're reading, these numbers and things like that. So come through, we got some other expenses and cost here. We come all the way down to this net income line. This is the line you always want to check. You want to check your top line up here and bottom line down here. So we lost 128 the prior quarter or the prior year, and we lost 103 this year. It's an improvement. Okay, it's definitely an improvement, but this is not, I'm not jumping up and down with this, but it is an improvement. So from an earnings per share basis, we're losing money, obviously, when you have negative net income. And again, if you've watched my other videos, I don't pay attention to earning per share because it can be manipulated and kind of construed by the number of shares outstanding. So we've seen this number tick up a little bit. They're probably compensating employees. They might have that convertible note convert to actual shares, things like that. So this is all, well in line to what we're seeing. And they're showing you here how this is stock-based compensation for each branch of the company. So you have research and development, typically with these tech companies, is the lion's share of how they compensate these developers and things like that. So, it's staying in line. It actually ticked down. All this is, relative, general administration actually ticked up a little bit. You tend to like to see it, really be concentrated in this research and development. That's pretty much where it is. Statement of cash flows. So you're seeing here's our net. So they pull this net income number here and they pull it down to here, and then they start adjusting that for things like depreciation and stock-based compensation. These aren't necessarily like cash coming out of this net income number. And they start adding back maybe some other things like accounts receivable and things like that. So it gets you down to this next net cash provided by operating activities. So this is like the cash flow of the business. Notice a year ago it was positive. 3 months ago it was positive, and it ticked negative here. Maybe some of this accounts receivable and some of this other stuff kind of, blew up that number just a little bit. But so it is ticked negative. Cash flows from investing activities. You can kind of see that, they have, these are treasuries maturing, and they kind of turned around and bought some here. They sold an investment here. It looks like they acquired some property here, and there's some other here, and it gets us down to, what did it do for the cash balance, basically. So they sold these, they bought these, and it basically led to 221 million in cash being dumped onto the cash asset. Got some taxes and some other stuff here, and this is more financing activities here. We finally get down to this cash at the end of the period, so you can kind of see how that's working quarter over quarter, or year over year here and quarter over quarter here. Here's some non-GAAP results. What's interesting about Zynga is they have this bookings number. So as I understand it, and it's explained more in depth in these documents, bookings is like, so you're playing a game and you buy some credits for the game, or like, you buy some like coins for the game, and you don't spend them all at once. Well, Zynga takes all that money in, but until you use all those credits for the game, then Zynga typically hasn't actually delivered on whatever you've bought there. So this bookings line is really kind of the total amount of money that they took in, but then they delivered here. And so you can kind of see there's a delta here of, about $20 million. That's basically Zynga has taken this money in. It's just the users of these games haven't used all that value up. And so it can kind of give you an idea like engagement and kind of how much engagement is left over. You kind of look at it too as almost like a gift card. So like Starbucks sells gift cards, they take that money in, but they haven't like delivered the coffee or the drinks. And so it's very similar here with Zynga. So they do this bookings number and things like that. Same thing with advertising. They might get prepaid on advertising, but that advertising hasn't run on the site or the game yet. And so that's a pretty insignificant number there. But that's what I just wanted to explain that as well. A little bit more of it here. They're showing you kind of this bookings and things like that. And folks, that about wraps it up for this step-by-step process. So you see a stock that, you know, somebody recommends to you, or maybe you followed it onto a watch list for a while, or you just notice, hey, look, this stock's ticking up. What's going on? So first thing I like to do, have they had a recent earning call? So what I like to do is jump in there, listen to the whole thing, or at the very minimum, listen to that question and answer period. Then go to the company's website, find the most recent quarter, jump into those financials. But also, if it's close to the annual report, which this was, the annual report had just been filed like 3 months ago. So I'm diving into that, and I want to see a year over year over year over year trend here. So we're really checking like top line and bottom line year over year trend here. So bottom line here, net income, top line revenue or sales, whatever they tend to call it. We're trying to see this trend year over year. And so we see it here. It's a little lumpy with the Zynga, but interesting. And then I think you dip into like the quarter. What's going on in the most recent earnings call? And it just happened that Zynga just reported about a day ago. So there we go. Hopefully this helps you out. Leave me a comment below if you want me to take a look at a company. If you have a question, hit that subscribe button if you can. Hit that like button. And if you have found this helpful, I would appreciate it if you share this video. Thanks again. We'll be back again this week with another video. See you guys then.